Hi guys, today I will be talking about why passive income is so important and why most of the people are missing the fruits of it. Now we all know what a passive income is, right? So passive income, I'm not going in detail, but long story short is basically you are earning money without working actively. So example, a writer writes a book and he is now doing nothing, and basically his book is now earning money. There are tons of examples of passive incomes, and there are hundreds of ways you can earn passively. I'm not going in detail, but I'm only talking about why this is so important and how we can get into it. So let's think about the time first. Example, if I'm working as an employee in a company, then my time is limited, right? I can work 8 hours or 10 hours. I cannot do multiple jobs. So if I'm making $100,000 per year, can I make $500,000 per year? No, because I need to do 5 jobs where my time is limited and I cannot do this. And that's where people are getting burned out. That's where people are getting depressed. That's where people are failing. So one of the drawback of normal income is our time is limited, but we want to achieve more. And we'll see how using passive income we can solve this problem. And then the second thing is some people say like, well, I have a lot of savings. I probably, don't need something else. Over here, the savings are always depreciated. This because think about uh, how much the value of money it was 10 years before. I made another video and described I was buying one egg for 2 taka in Bangladesh. Now the cost of one egg is about 12 taka, or in some of the cases it's 15 taka. So in about 10 years, the cost of an egg is 5 times or even more, and it's same everywhere regardless which country you are living in. So value of your savings are much depreciated. If you think about I can run about 5 years with my savings, that's probably not true because you are not calculating the value of your money and how it is depreciated. And of course, if you are not working, then your savings will work only for certain years. And it's realistically not possible to save huge funds throughout your life, right? The other thing is, savings are always taxed by all of the government. So even if you earned money and paid your income tax, you save this money in a savings account or whatever format, every year you are paying tax on this. So you are paying tax twice for your savings. And then the third thing is whatever you are earning, or whatever the job is, or whatever business you are in, tax are always getting increased. And it's same for everywhere, every country. Now how passive income basically solve all about this is because since in passive income you are not providing your time, someone else is doing your job and you are making money without working. So this when you earn this passively, you are basically utilizing other people's time. So the problem of your limited time is solved because you are using other people's time. uh, Example, if I have a rental property, then my property manager is taking care of my property, my time is free and I'm earning passively. If I have a car rental business, someone else is driving the car and I'm earning money when my car is on the road. If, for example, there are lots of passive earning strategies, I'm not going in detail, but long story short is you are basically utilizing other people's time. So when you are using other people's time, you can convert your savings using the passive income and invest on the things you are earning passively. As a result of the investment, you are basically earning plus saving, and your money is getting appreciated because it's working on your current market. So your example, $100,000, if you save, it's not same after 5 years or 10 years. The value is getting much depreciated. But if it's working on the market in an investment format, it's in, it's basically increased and appreciated every time. Now, how about the tax? When you earn passively, you are paying almost no tax. And how this is, that's because how government enforce tax, or how the tax strategies work. Tax work when people work. If I'm not working, then government cannot tax me, right? Because we are I'm earning based of my work, and that's where I'm making money and I'm paying tax. If someone else is working and someone else is basically earning, which are coming on into your pocket, then you are basically not taxed directly. That's why a passive income tax bracket is useless. If you are not sure or confident with what I'm talking about, ask your CPA and ask, hey, how my tax is reduced when I'm earning passively. Now, we all understand what a passive income is. I will make a separate video how you can earn passively without any investment, meaning without money investing, how you can earn passively. But over here, I have made a very little quick chart where you can differentiate the earnings. Anyone and everyone earning in this world or making money, they are making money in three of the categories. One, they are in a job or they are investing their time and they are earning, which is basically called earned income. And the second type of income is called the portfolio income, meaning it's something like business. Example, you have 5 apple, you bought for $5 and you are selling for, let's say, $6, you are making $1 profit. It's your portfolio income. So in the portfolio income, you need money. It can be a business, it can be a furniture business. You are buying some furniture and selling it, you are making profit. You are buying one real estate and you are selling it. That's your portfolio income. Now, the passive income is you are not actively buying and selling, and you are not actively working and investing your time. Someone else is working on this. That's a passive income. Now, if you understand this, let's think about how much time I need for all of those. For earned income, meaning most of the jobs, you are basically investing your time. So your time is needed. For portfolio income, yes, the time is needed because you need to manage this business or you need to involve in buying or selling or those categories, unless you have a very big business and someone else is taking care of it. For the passive income, no, your time is not needed, it's saved, and that's why it's a passive income. So your time is saved, which is most valuable asset for you. Do I need money for earned income? No, that's because when I'm working or I'm doing a job, I don't need money. I'm using my skills or my labor and earning money. For the portfolio income, yes, you need money in most of the cases, unless you are financing or borrowing money. For passive income, in most of the cases, you do not need any money or investment. And like I said, I will make a separate video how you can earn passively without investments. Now let's see how your earnings are taxed. If you earn income in a job, yes, you are high taxed. Example, in the United States, the tax bracket differs, but it can be from 20% to all the way up to 30%, right? Now, think about this. If you are earning $100,000, probably you are, you are paying 20,000 tax. Portfolio income is even taxed more in a lot of situations. If you have a very short-term gain, then you are even high taxed. So, how about the passive income? Passive income has very less or almost zero tax. And that's one of the reason why you will see, real estate investors are paying no tax. How they pay no tax legally? Because they are not earning actively. It's not their earned income, it's their passive income. uh, Example, you will see like a lot of big investors, they are investing in the things and they are earning passively. They provide almost no tax and it's legally. If you have any question about this, ask your CPA and they will explain it better than I do. How about the risk factors? Well, in earned income or job, people say job is less risky. But no, you do not have control over on your job. All of these companies are laying off. People are losing their job every day. Uh, it's not always up to you. It's up to your employer to keep you or not, regardless how high performer you are. Companies are laying off, right? So it's very risky. You need to have very high skill set and mindset for getting into the next job if you are laid off. How about the portfolio income? Yes, it's risky too because you are investing something, you are buying something. You may have risk for losing those assets, or they may be rotten too, right? If they are fresh commodities. How about for the passive income? The risk factor is almost zero because in most of the cases there is nothing to lose, and if there is anything to lose, you can have insurance. Example, for real estate properties, you can buy insurance and mitigate your risk in buying the insurance. If I have a book and my book is published and I'm making money from my book, I have almost zero risk factor for my knowledge. How about OPT, meaning other people time? Can you use other people time on your own job? No, you are required to put on your time and work daily. How about the portfolio? How about for the portfolio type? Yes, you can use other people time, but you need to pay for this, right? And same for the passive income too. So you can use other people time in portfolio income and passive income. And how about other people money, like borrowing money or money from bank? For earned income, you definitely don't need this. For passive income, yes, you can borrow money, but those can be highly taxed. And how about passive income? Passive income, yes, you can borrow money and earn money passively while paying almost zero tax. So this is more beneficial. How about scale up? Meaning how can you go bigger and biggest, right? So in earned job, you cannot. Even if you become a CEO of a company, your earnings are limited. You cannot become 5 or 10 CEO of 10 companies, right? So you cannot scale up while you're earning, while you are in an earned type of income bucket. How about portfolio income? Yes, this is scalable because you can make your business scalable and make a bigger business. How about passive income? Yes, those are scalable. So you can do multiple things passively. Think about the three reasons. You can utilize OPT, OPM, and you can scale up the business with no investment and you can earn passively. And that's one of the reasons, that's the main three reasons why passive income is so important. And I'm not sure why most people are missing about it. I'm planning to make a video why most people are missing about it. So keep in touch and thank you for watching my video.